Good morning, it's today again. Welcome back to Joseph's Reserves. I'm Joseph, and I store 20% of my income in the form of rare coins and precious metals. A lot of stackers talk about the gold to silver ratio, but I think they're looking at the wrong thing. The gold to silver ratio is a market indication. It's simply the gold price divided by the silver price, and it can tell you a lot about which metal is overvalued or undervalued. But what I want to talk about today is your personal gold to silver ratio, and that's more about what you personally can hold through volatility. Congratulations to Agendwi Anders for being the first comment on yesterday's video. Thank you for the support. Go find him down below in the comments to start a conversation. There has recently been a lot of talk about the gold to silver ratio, and what most people are talking about is the market gold to silver ratio. In the last year, it has peaked at about 105 and then dropped dramatically down to 49 to 1. And this is definitely significant enough to catch a lot of attention. But while that number matters in the market, it's not the most important number to your stack because your stack isn't the market, it's personal. In the last video, we talked about how silver builds and gold preserves. But now we're going to take a step further to figure out how to balance the two. And this isn't about how to get the perfect ratio because that doesn't exist. This is about how to build a system that matches your risk tolerance, your mindset, and your own personal long-term goals. That way you can continue to hold on to your stack through anything. And before we get too far into this, I want to clarify what I mean about the market ratio and your personal ratio. So the market ratio is simply just the gold price divided by the silver price. It's the theoretical ratio of the cost of gold in ounces of silver. So as gold performs differently than silver and silver performs differently than gold, those ratios are going to change over time. And usually they'll signal when something is overpriced or underpriced, and a lot of stackers change their allocation based on this ratio. And that's not what I'm going to be talking about today. I'm talking about your personal gold to silver ratio, what you actually hold, how much ounces of silver and how much ounces of gold. And even in explaining it that way, my thinking is already flawed. I'm talking about ounces versus ounces. Someone might simplify it by saying they have 100 ounces of silver and 1 ounce of gold. But that doesn't tell the full story. That doesn't say how much in value you have in silver versus how much in value you have in gold. So instead of thinking of it as setting an ounce to ounce ratio, we really need to shift into a mindset of percentages. How much of your total stack, what percentage of your total stack is in gold or is in silver? Even the example I just said, 100 ounces of silver to 1 ounce of gold at today's spot prices is a 60% allocation into silver and a 40% allocation into gold. And that already feels like a completely different conversation. And I already know what you're thinking. Okay, sure, we changed how we think about it, but is that 40-60% split a good one? Is that what I should be doing? And this is the key. This is the point of the entire video. Your gold to silver ratio should be based on one thing, and that is your ability to handle volatility. Silver moves much faster. It can swing up and swing down very quick. Gold moves a lot slower. It's a lot more stable. It holds its ground better during uncertainty. So your ratio comes down to this question: how much movement am I comfortable with? If you're okay with the swings, then you'll lean naturally towards silver. But if you want stability, you'll lean towards gold. And this isn't about being right or wrong, it's about being honest with yourself. And notice how that one question, how much movement am I comfortable with, isn't going to give you, oh, I'm comfortable with a 60-40 split. I'm comfortable with a 30-70 split. It doesn't answer it entirely for you. There are a few questions that you need to experience. Like when silver drops 10 to 20%, how do I actually react? How calm or stressed do I feel when my stack starts to drop and silver's dropping faster than gold? Am I checking the prices constantly during a time of volatility? Do I feel tempted to sell or buy more? And that is really how you're going to answer that question of how much movement you're comfortable with, by experiencing the movement and feeling how uncomfortable it is. Of course, in a perfect world, right before a bull run, we would trade all of our gold into silver and watch the gold to silver ratio bottom out. And then at the peak of that bull run, we would trade it all back into gold. And that way, gold will stabilize and maintain a lot of what we built while silver drops dramatically. But this is not ideal. We can't be watching the market that closely and understand exactly how everything's going to play out, especially if you're moving tens of thousands of dollars from one asset to another. This isn't quite like trading stocks or ETFs. With physical gold and silver, there are premiums and spreads, and quick trades like that don't ever play out the right way. So we end up with this balancing act. How much silver am I going to hold to capture the big upswings? And how much gold am I going to have that's going to protect me from the massive downswings? And a pretty conservative stack, I'd say, would be somewhere around 70% gold and 30% silver. This is someone who values the stability and wants to minimize stress during the downswings. A balanced stack, I'd say, could be 50-50. And this would give you a mix of that stability and growth potential. But a really aggressive stack would lean heavier into silver, 30% gold, and maybe 70% silver. And this leans into that volatility and potential upside. But of course, there is the potential downside of having an aggressive stack while the markets are coming down. And there's also the potential downside of having a conservative stack during a bull run and everything's going up. The key to know here is that none of these are correct. They're just starting points, and your job is to figure out what fits you the best. So overall, if your stack feels too volatile, you may need more gold. And if your stack feels a little too slow, you may want more silver. This is how you self-correct over time. Then, of course, there's a whole other third layer. We could talk about things like platinum and palladium, copper, and even numismatics. Those things can come into play, but these are not core holdings. They're small, more speculative parts of your stack. Think of it like this: gold and silver should be your foundation, and everything else is optional. And usually these portions stay relatively small compared to your core metals. Another mistake that some stackers fall into is choosing a ratio and trying to stick to it forever. You don't have to just pick one thing and stay there always. Your ratio can evolve. You might start heavier in silver while you're building your stack and then shift towards gold as your stack grows, or adjust slightly based on market conditions. The key is not to overcomplicate it. You don't need to constantly be rebalancing, but you also don't need to stick to one thing every single purchase or all the time trading into this specific ratio. And over time, the volatility is going to affect you differently anyway. When you're much younger and have a lot more time in the market ahead of you, you might be a little more willing to handle some volatility. When you're a little older and want to make sure you have that stability, then you'll probably lean a lot heavier towards gold. The key here is that you have to control your ratio. Don't let the market control your ratio. If you were locked in on some specific ounces to ounces ratio, like 100 ounces of silver to 1 ounce of gold, while that may work for you as a 60 to 40% holdings, if silver was to run up a lot faster than gold, let's say silver triples while gold only doubles, that turns your 60-40 holding into something more like 75 to 25, which might end up feeling a little bit extreme for you. So right now is a perfect time to take a screenshot of how you feel about the volatility the market has just been feeling. We recently had a huge upswing in silver and gold, and then even more recently, a massive drop in both. And if you look at the gold to silver ratio, the market gold to silver ratio, it tells the full story of what actually happened to that gold and silver relationship. Silver moved significantly faster than gold in both directions. And how you felt about it at the moment can tell you a lot about what you currently have and possibly what you should change. At the end of the day, this is what it really comes down to. Your gold to silver ratio isn't about maximizing gains. It's about building a stack that you can hold through price drops, market swings, and uncertainty. Because if you can't hold it, the strategy doesn't even matter. A perfect ratio that you abandon under pressure is worse than a simple one that you stick to for years. I just made my own line of coffee. Joseph's Reserves It's Today Again coffee. Most mornings aren't dramatic. They're quiet. You wake up, pour yourself a cup, and now you have a choice. Drift through the day or take hold of what's in front of you. That's really what this whole thing's about. Showing up, building good habits, staying disciplined in the small things. Whether that's stacking consistently, learning something new, or just being faithful with what you've been given. I put these words on every bag to remind myself first. Every morning is a gift. Not yesterday, not tomorrow, today. So take a breath, take a sip, and let's get to work. It's today again. You can now write me at Joseph's Reserves, 10160 Highway 242, Suite 800, number 401 in Conroe, Texas, zip code 77385. Make sure to include your information so I can write you back. If you like this video, make sure you go down and give it a thumbs up. Go into the comment section for any questions, comments, or to start a conversation with someone new. Share the video to anyone you think may like it, and subscribe if you haven't already. But most of all, thank you so much for watching. And just remember, every ounce adds up, so no matter how small, just keep stacking.